We need to talk about stock. Stock markets, what are they? How do they work? We've been talking about the Great Depression, and one of the causes, one of the most interesting things in the Great Depression is this whole stock market crash. But before you look at that, you should probably know what it is. And you know what? You may want to invest one day. So what is this? You could say it's the
capital raised by a company or corporation through the issue and subscription of stock.
Or you could say something like
a portion of a company's stock as held by an individual or group as an investment.
Thanks for tuning in. As always, share. Tell me what you think in the comments below, and we will continue to bring you excellent content. Social media is a great place to share this. Hit that like button, and if you haven't already, subscribe.
And what it looks like. Let's say you want to start a company. You hear that the trucking company might be a good thing. Let's go with futuristic, self-driving AI trucks. You can program them to abide by the speed limit. They can move in a caravan and kind of stay together, yada yada. So anyways, you have enough money to buy one of these new high-end trucks. Or you could take that same amount of money and join a group of people and own 1/4 of 4 different trucks. That might seem weird. You're sharing this business with somebody else. What's the difference between owning 1 truck and owning 1/4 of 4 trucks? Well, when the ice storms come and there's a highway accident because it's icy on the roads and all the companies end up losing a truck. If you have 1 truck, your business halts until you repair that situation. If you have 1/4 of 4 different trucks, you can still make money the very next day. You have some flexibility. You have the ability to continue making money as you rectify that situation. It's a shared risk, shared reward, share the resources. This is what you call like a joint stock corporation or something of that nature. And that principle is the same principle behind all stock. If a business, whether it be Nike or Google or Apple or McDonald's, they have a great legendary campaign of marketing that they just started. Something goes very well, and everyone knows that that company is going to increase its value. Wouldn't it be nice to take advantage of that? Wouldn't it be nice to get a piece of that? But the only way you could do that is somehow being a part of that company. Nobody wants to actually manage one of those companies because you don't have the background knowledge, or you might, but you don't got the time. Listen, owning a stock is owning a portion of that company. What part of the company do you play? You let your resources, your money, your capital be used to help that company expand. And when that company successfully expands, so does the value of your initial investment. Let's make up super startup technology, software, computer company, whatever. So, super startup company, let's just use round numbers. You buy in for $100 for 1 share. And to keep the numbers round, that 1 share is 1% of their company. They're starting out. When that company that was originally worth $50,000, small fry, is now worth $100,000, your $100 share is now worth $200. That 1 share is now valued at $200. What makes the value of a stock go up and down? It can be everything from Zion Williams ripping through his shoe, to a new hamburger coming out, to a really cool campaign of marketing, to a superstar wearing your particular sunglasses or clothing in a very high profile scenario. What can make it drop, go up and down? Everything from the CEO being caught saying some horribly racist comments in public, having a rant, getting caught publicly drunk, leaving his wife. Why would leaving your wife as the CEO make your company look bad and lose some value? Because it's instability. The market doesn't like instability. And neither do investors. Let's talk Great Depression. What does this have to do with the Great Depression? What does this have to do with various portions of American history? Well, in the Great Depression, when things got bad, people panicked. Speculation is a huge part of the stock market, and if people are forecasting troubled times, they act accordingly. But at the time, people panicked, and people were selling their stocks left and right. if you're trying to sell something fast, do you sell it for a higher price or lower price? So things were losing value very quickly because thousands of investors were selling. And they were trying to sell quickly before the value got too low that they didn't make any money or they lost. Is one of the reasons we fell into this horrible depression. Not the only reason, just one of the reasons. Now, once again, we said Zion Williams. Zion Williams rips through his Nike shoe. Did they take a hit the next day? Little. Investors knew the reputation of Nike. They realized that United States is doing okay right now. So I'm not going to sell right now because I know Nike is bouncing back. So ladies and gents, that's stock. It's pretty much a portion or a fraction of a company that you own. Would you invest in stock? Would you use some of your money to own a tiny little piece of a company, hoping that company expands? Let me know in comments. Be good.